Hello viewers, welcome to my channel. I am Hashim Ali Khan here. So right now I am giving the lectures on the subject income tax 2. The topic is capital gain. So already 2-3 videos I have uploaded. Hope my regular viewers have already watched those videos, and we are continuing the problems. Now I am going to start the next problem 15. So if you have not watched the theory video, then I suggest you to first watch the theory on capital gain. How to compute capital gain, what is the procedure of computing the capital gain, and what are the provisions of Income Tax Act regarding the computation of income from capital gain. All these things I have explained in the previous video, the video on introduction. So after watching that video, definitely you can enjoy, you can easily understand the problems. So before starting the problem, I expect my viewers to have a hard copy printout of the problems which I have provided in the link under my description. So first take a printout, keep it ready before watching the video, then only you can understand the problem solution, you can get the command on income tax. So remember, income tax is not as easy as other subjects. It has so many provisions you have to remember. If you commit any mistake in the provisions, you will not get the marks. That's the reason why you have to work a little bit harder for this subject. And watch the video till the end, don't skip in between. If you want complete knowledge, watch till the end. And if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects, on different topics. Select your subject, select your topic, watch the video till the end. Definitely you can enjoy, you can increase your knowledge. Now I am reading out the 15th problem. Mr. Krishna sold a house on 1st September 2018. Our previous year is 1819. 1st April 2018 to 31st March 2019. During this previous year, if an asset is transferred, then the capital gain arising will be taxable in the assessment year. Assessment year is 1920. Now, this house was inherited by him during 2001-2002 from his father, who had constructed it in 1991-92 for rupees 1 lakh. So Mr. Krishna got the ownership by special mode of transfer, that is inheritance. Actually, Krishna's father has got constructed during in the year 2001-2002, no, 91-92. Later on, he got inheritance. Through inheritance, he got in 2001-2002. Mr. Krishna spent 1 lakh rupees on renovation of the house in 2006-2007. That means cost of improvement. So here we have cost of acquisition and cost of improvement. And fair market value of the house on 1/4/2001 was rupees 9 lakh. See here, according to the provisions of Income Tax Act, if the property was purchased before 1/4/2001, the assessee can choose higher of the following two: actual cost or fair market value on 1/4/2001, whichever is higher. So actually his father got it constructed for rupees 1 lakh in 91-92, and its fair market value on 1/4/2001 is 9 lakh. So definitely, naturally, the assessee will choose 9 lakh rupees. By choosing this FMV 9 lakh rupees, then only his tax liability will come down. He should not take his actual cost of 1 lakh. Now this house was under negotiation for sale in May 2010, and he receives 40,000 as advance money. The contract could not materialize and the advance money was forfeited. So again in this problem we have forfeiture of advance money received. So during the year 2010, Mr. Krishna entered into an agreement to sell and received 40,000 rupees advance. Later on, the contract was not materialized and 40,000 advance money was forfeited. Now, Income Tax Act has given the provision, if the advance money is forfeited before 1/4/2014, then advance money will be deducted from cost of acquisition. From cost of acquisition. If advance money is forfeited after 1/4/2014, then it will be taxable under income from other sources. That point you remember. Here in our problem, the advance money was received and forfeited before 1/4/2014. So this advance money 40,000 will be deducted from the cost of acquisition. Then compute the amount of capital gain assuming that he does not qualify for any exemption. He is not going to get any exemption under section 54. How much is the income from capital gain? Now see, computation of income from capital gain of Mr. Krishna for the assessment year 1920. Consideration received 30 lakh. Then transfer fees nil. No transfer fees are given. Net consideration 30 lakh. Indexed cost of acquisition. Indexed cost of acquisition. The cost to the present owner is the cost to the previous owner because he got the property through special mode of transfer, that is inheritance. So Krishna has not purchased. Krishna's father has purchased. He purchased for rupees 1 lakh. But FMB on 1/4/2001 is 9 lakh. So 9 lakh rupees is the cost of acquisition. From 9 lakh rupees, subtract the advance money forfeited, 40,000. So from 9 lakh minus 40,000, 8,60,000 is the cost of acquisition. 8,60,000 cost of acquisition into 280 by 100. 280 is the index of the current previous year 2018-19 and 100 is the previous year for the year 2001-2002. That is on 1/4/2001. 100. So 24 lakh 8,000. This is the indexed cost of acquisition. Now indexed cost of improvement. Krishna has incurred some expenditure on adding some rooms. So Krishna has renovated the house by spending 1 lakh rupees in 2006-2007. During 2006-2007 there was an improvement. The indexed cost of improvement 1 lakh rupees into 280 divided by, what is the index for 2006-2007? It is given in the problem. 2006-2007, 122 is the index number given in the problem. Divide by 122. This is the indexed cost of improvement. Subtract, both we have to minus, that's why I am putting it in bracket. So 30 lakh minus 24 lakh 8,000 minus 2 lakh 29,508, you will get long term capital gain 3 lakh 62,492. That's all. Now in working note, I'll give you some explanation. The SSC Mr. Krishna got the house through special mode of transfer, that is inheritance. That is inheritance. So the cost to the present owner is the cost to the previous owner. Present owner Krishna, previous owner father of Krishna. So whatever is the cost of acquisition to father, that is the cost of acquisition to the son, Krishna. Next, the cost of construction to the previous owner was before 1/4/2001. So we can take the FMB on 1/4/2001 as the cost of acquisition. 1/4/2001 se pehle acquire kare, that's why FMB will take. FMB is 9 lakh. Now, the advance money was forfeited before 1/4/2014. So rupees 40,000 will be deducted from cost of acquisition. Just now I have explained you the provision of Income Tax Act regarding forfeiture of advance money received. It will be deducted from cost of acquisition. So 9 lakh minus 40,000 is 8,60,000. That 8,60,000 indexed. Next, the long-term capital gain of rupees 3,62,492 is taxable at a flat rate of 20%. That's all. This is the end of problem number 15. Now, 16th problem. See carefully. Mr. Raju owned one residential house and sold it in October 2018, our current previous year, for rupees 11,80,000. Consideration received. This house is purchased for rupees 1 lakh in 1982-83. It's a long term, more than 2 years. He spent 10,000 rupees for construction of another room in 84-85. This is the improvement. Expenses incurred in the execution of sale deed was 10,000. Transfer fees 10,000. Compute his capital gain. It is very, very simple. No complication, nothing. The SSC is Mr. Raju. So computation of LTCG of Mr. Raju for the assessment. Consideration received is 11,80,000. Less transfer expenses 10,000 given in the problem. The net consideration 11,70,000. Now indexed cost of acquisition. Actually, while calculating indexed cost of acquisition, we have to see whether the property was acquired before 1/4/2001 or after 1/4/2001. If the property was acquired before 1/4/2001, then the SSC can choose the fair market value. But unfortunately, this is the first problem where FMV on 1/4/2001 is not given. The fair market value on 1/4/2001 is not given. So that's why we are indexing the actual cost, not FMV. The actual cost we are indexing. So indexed cost of acquisition, actual cost 1 lakh into 280 by 100. 280 is the current previous year index, 100 is the index for an asset which was acquired before 1/4/2001. For any asset which is acquired before 1/4/2001, we have to take the index number as 100. So 2,80,000. Indexed cost of improvement. Raju has spent some amount on constructing some rooms. So 10,000 rupees he has spent. So 10,000 into 280 by 100, 28,000. Now subtract 11,70,000 minus 2,80,000 minus 28,000. 8,62,000 is the long-term capital gain, LTCG. So since the FMV, fair market value on 1/4/2001 is not given in the problem, so we find the indexed cost of acquisition and indexed cost of improvement at its actual cost, not at the fair market value. If fair market value would have been given, then we would have calculated indexed cost of acquisition at FMV. That is the point. So this is the end of problem number 16. Now we'll start the 17th problem. See the problem number 17. I am reading out the problem. Mr. Avtar Singh purchased a plot in 2002-2003 for rupees 4 lakh. It was sold on 15th November 2018, means current previous year. It was sold for 14,80,000. This is the consideration receipt. And he paid 20,000 as brokerage charges, transfer expenses. He invested rupees 2 lakh in bonds of National Highway Authority of India and 3,10,000 in the bonds issued by Rural Electrification Corporation Limited. That means when the amount is invested in specified securities, the specified securities like bonds of National Highway Authority of India and bonds of Rural Electrification Corporation India Limited. So these are called specified securities. So if the SSC invests in specified security, he will get the exemption under section 54 EC. 54 EC. Compute taxable amount of capital gain if CII, cost inflation index, for 2002-2003 is 105 and 2018-19 is 280. Current previous year index 280. That's all. Now see carefully here. Computation of LTCG of Mr. Avtar Singh for the assessment year 1920. Consideration received 14,80,000. Less transfer expenses are 20,000. Then 14,60,000 is the net consideration. From this we subtract the indexed cost of acquisition. It was purchased a plot. Mr. Avtar Singh purchased a plot land and 4 lakh rupees. So 4 lakh rupees is the actual cost into 280 divided by 105. 105 is the index of the purchase year. Purchase year was 2002-2003. So index number for 2002-2003 is 105 given in the problem. So 280 divided by 105, 10,66,667. Subtract it, we'll get capital gain 3,93,333. From this capital gain, exemption under section 54 EC. Exemption under section 54 EC is allowed. So how much exemption is allowed? I have given in working note. Deduct it, we'll get long-term capital gain, nil. We are not getting any long-term capital gain. The entire amount of capital gain is exempted under section 54 EC. Now here, the assessee sold a plot of land and invested the amount in bonds of National Highway Authority of India and Rural Electrical Corporation of India. So exemption under section 54 EC is allowed to the least of the following two amounts. So when the amount is invested in bonds of National Highway Authority of India or bonds of Rural Electrification Corporation Limited, these are the specified securities under section 54 EC. The exemption is least of the following two amounts. First, actual amount invested. So the SSC has invested 2 lakh rupees in National Highway Authority of India and 3,10,000 rupees in Rural Electrification Corporation Limited. So total amount invested are 5,10,000. Whereas the fixed amount is 50 lakh. So exemption can be given to a maximum amount of 50 lakh rupees. The least of these two is 5,10,000. But we cannot give 5,10,000 exemption. If we give 5,10,000 exemption, long-term capital gain will get negative. Long-term capital gain, we will get negative figure. So we will restrict our exemption up to the capital gain. We cannot give exemption up to 5,10,000. If we give 5,10,000, our LTCG will become negative. So we cannot give up to that extent. So whatever capital gain is there, 3,93,333, up to that amount, exemption can be given under section 54 EC. So long-term capital gain will become nil. That's all. This is problem number 17. Now see the problem number 18. I am reading out the problem 18. From the following information of Mrs. X, compute taxable capital gain for the assessment year 1920. Cost of acquisition of residential house in 2001-2002, 5,50,000. This is the actual cost of acquisition. Sale proceed on 2nd August 2018, means current previous year. During the current previous year, she sold the residential house for rupees 21 lakh. And cost of construction of new residential house. The house was constructed during 1819. The house is used by Mrs. X's sister, 4 lakh. In this problem, the assessee sold one residential house and within the stipulated period purchased another residential house. So exemption under section 54 will be allowed. Then the cost inflation index in 2001-2002 was 100 and 1819 was 280. That's it. Easy problem. Computation of LTCG of Mrs. X for the assessment year. Consideration received, sale proceed is 21 lakh. Transfer fees are not given in the problem. So net consideration we got 21 lakh. Indexed cost of acquisition. She purchased the house for rupees 5,50,000. 5,50,000 into 280 by 100, 15,40,000. So indexed cost of acquisition 15,40,000. Subtract it, you will get 5,60,000 as the capital gain. From this capital gain, we subtract exemption under section 54. 4 lakh rupees exemption. So 1,60,000 is the LTCG, long-term capital gain. That's all. So the assessee sold one residential house and purchased another residential house. So exemption is allowed under section 54 to the extent least of the following two. Cost of the new house 4 lakh given in the problem. The cost of the new house 4 lakh. And capital gain amount is 5,60,000. Whichever is least, so 4 lakh rupees are least. So exemption is given up to rupees 4 lakh. So 4 lakh rupees exemption. LTCG 1,60,000. That's all. This is the end of problem number 18. Now see the 19th problem. Sri Kiran purchased a building for rupees 3 lakh. Concentrate now, little bit twisted problem here. Sri Kiran purchased a building for rupees 3 lakh in October 2001. So previous year will be 2001-2002. And for 2001-2002, index number will be 100. So in October 2001 and gifted to his daughter Mrs. Jeevani in 2003. In 2003, Mr. Kiran has gifted the property to his daughter Mrs. Jeevani. Now owner is Mrs. Jeevani. The other particulars are as under. Some additions were made in 2003, January 2003. January 2003 means 2002-2003. Previous year 2002-2003. And renovation of the house capital expenditure in August 2005. The previous year 2005-2006. 50,000. If the house is sold on 15th January 2019, current previous year. The current previous year is 2018 to 2019. 1st April 2018 to 31st March 2019. And she sold the house on 15th January 2019. Before 31st March 2019. And for 22,10,300. And selling expense are 35,000. So consideration received 22,10,300. and selling expense 35,000. If the cost inflation index for 2001 2002 is 100 and 2002 2003 is 105 and 2005 2006 is 117, calculate capital gain. Now, computation of LTCG of Mrs. Jeevani for the assessment year 1920. Consideration received, sale proceeds are given 22,10,300 less selling expenses, transfer expenses 35,000, subtract net consideration 21,75,300. Now one by one we have to deduct indexed cost of acquisition, indexed cost of improvement at different dates. So first we'll take indexed cost of acquisition. The SSC Mrs. Jeevani got the ownership by special mode of transfer, that is gift. Mrs. Jeevani got a gifted property from his father Sri Kiran. So the cost to the present owner is the cost to the previous owner. Previous owner was Sri Kiran and Sri Kiran purchased the house for rupees 3 lakh. 3 lakh rupees. So 3 lakh into 280 divided by 105 because he acquired the asset during the year 2002-2003. So it is given in the pronoun. Sri Kiran purchased the building in October 2001. October 2001. But she got the property in 2003. 2002-2003. She got the property in 2002-2003. So 2002-2003, it is 105. So 3 lakh into 280 by 105, 8 lakh rupees. Similarly, indexed cost of improvement. Improvement was also made in 2002-2003. So 2,50,000 into 280 by 105. 2002-2003 index is 105. Current previous year 280. So 6,66,667. 667. Some capital expenditure is incurred. That is also cost of improvement. So 2005-2006, 50,000 rupees are incurred capital expenditure. So 50,000 into 280 by 117, 1,19,658. Take the total, we'll get 15,86,325. This is the total of indexed cost of acquisition and indexed cost of improvement. So long-term capital gain we got 5,88,975. This is the LTCG. The asset is held by the SSC for more than 2 years. Hence, it is a long-term capital asset. So this is the end of problem number 19. Now see the 20th problem. Problem number 20. During the previous year, relevant to the current assessment year, Srimati Swapna sold the following assets. Compute the income from capital gain and tax liability if income from other heads is nil for the current assessment year. So we have to compute the income from capital gain if the SSC Srimati Swapna does not have any other income other than capital gain. So particulars: house let out for commercial, open land in city, gold. So 3 assets she is selling. What are the 3 assets? House let out for commercial, open land in city and gold. Date of purchase. First of all, we'll see the date of purchase. House 21st March 1999. That means before 2001. And open land in city 1st May 2005, after 1st April 2001. Then gold 4th May 2009. Then date of sale 13th January 2019, current year, current previous year. The current previous year is 1819. From 1st April 2018 to 31st March 2019. And before 31st March 2019, on 13th January 2019, she sold away all the 3 assets. Purchase price. Purchase price means cost of acquisition. First 10 lakh, next 7 lakh, next 38,000. Sale price, consideration received 25 lakh, 20 lakh 85,000, 1 lakh 28,500. Then transfer fees 0.5% for house, 1% for land and 2% for gold. The cost inflation index for 2005-2006 is 117 and 2009-2010 is 148. And current previous year index already we know it 280. For the year 2018-19 it is 280. That's it. So we have to compute what is the income from capital gain of Srimati Swapna. Computation of LTCG of Srimati Swapna for the assessment year 1920. House, open land, gold. Consideration received. This is the sale price given in the problem. 25 lakh house, 20 lakh 85,000 open land, and gold 1 lakh 28,500. Transfer expenses percentages are given. So we apply that percentage on the consideration received. So just like first on house 0.5%. So 0.5% of 25 lakh you will get 12,500. Secondly, open land 1%. 1% of 20 lakh 85,000, 20,850. And 2% on 1 lakh 28,500, 2,560. So subtract transfer expenses, net consideration we got. From this we deduct indexed cost of acquisition. Here I have calculated house. The purchase price of the house was 10 lakh. Current year index is 280 and it was purchased before 1/4/2001. When any asset is purchased before 1/4/2001, we should take the index as 100. Index as 100. Similarly, open land 7 lakh. Purchase price 7 lakh into 280 divided by 117. 117 is the index number for 2005-2006. It was purchased in 1st May 2005. So previous year 2005-2006. So 117. Similarly, gold 38,000 into 280 divided by 148. It is given 148 is the index for 2009-2010. So these are the indexed cost of acquisition. Now subtract, will get long-term capital gain or long-term capital loss. In the case of house, 24 lakh 87,500 minus 28 lakh, we are getting minus 3 lakh 12,500. There is a capital loss, long-term capital loss in case of house. For open land, it is 3 lakh 88,936 long-term capital gain. Whereas in gold, 54,038 positive value, long-term capital gain. So in case of open land and gold, we have long-term capital gain. In case of house, there is long-term capital loss. Now tax liability. LTCG on open land 3,88,936. LTCG on gold 54,038. So total LTCG 4,42,974. From this we can subtract the long-term capital loss. How much is the long-term capital loss? 3,12,500. So 3,12,500 we subtract. The net amount of capital gain LTCG is 1,30,474. The total long-term capital gain is 1,30,474. It is given in the problem that Srimati Swapna does not have any other income other than this LTCG. That means her total income is 1,30,474. It is below the basic exemption limit of rupees 2,50,000. The basic exemption limit is 2,50,000 and her income is below the basic exemption limit. So her tax liability is nil. No tax liability, zero. This is the end of problem number 20. Now I am coming to the last and final problem on capital gain. Problem number 21. See the problem. Srimati Jyoti, age 42 years, non-senior citizen, owned a residential house at Haridwar city. It was acquired by her on 6th July 2004 for rupees 12,50,000. So this is the cost of acquisition during the year 2004-2005. She has purchased on 6th July 2004. The previous year 2004-2005 for rupees 12,50,000. CII 130. Cost inflation index is given. On 3rd December 2018, she entered into a contract to sell the house to Mr. Pradeep for 40 lakh and received 1,50,000 as advance also. Before the due date of agreement to buy, Pradeep expressed his unwillingness to purchase and 90,000 advance money is forfeited. Now remember, new point. Advance money received in sale agreement and the advance money is forfeited because the sale agreement was not materialized. Now we have to see when this advance money is forfeited. Is it before 1/4/2014 or after 1/4/2014? If it is received after 1/4/2014, it will be taxable under income from other sources. Now see, she entered on 3rd December 2018. She entered into a contract to sell. That means after 1/4/2014. After 1/4/2014, she has entered into an agreement and forfeited the amount. That means this advance money forfeited 90,000 is taxable under income from other sources. On 2nd March 2019, Srimati Jyoti sold the same house to Mr. Varman for 60 lakh. During the current year, she sold the house property for rupees 60 lakh and state government valuation is 72 lakh. Now a new point is there. For stamp duty valuation, for government valuation, it is 72 lakh, whereas she sold for rupees 60 lakh. Now Income Tax Act says, if the government valuation is more than 105% of sale consideration, if the government valuation is more than 105% of sale consideration, then we should take the government valuation. Here, sale consideration was 60 lakh, but government valuation according to stamp duty, it is 72 lakh. Now we have to find out whether it is more than 105% or less than 105%. If the stamp duty valuation is more than 105%, we must take the stamp duty valuation as the consideration, right? So 60 lakh, you can say 60 lakh. 60 lakh into 105%, it comes to 63 lakh only. It comes to 63 lakh only, but government valuation is 72 lakh. So Income Tax Act says government valuation should be taken as consideration receipt. Stamp duty valuation 72 lakh. Consideration, actual consideration received is 60 lakh. So if you calculate 105% of 60 lakh, you are getting 63 lakh. 63 lakh. Whereas government valuation is 72 lakh. So we should take 72 lakh rupees as the consideration received for computing long-term capital gain according to provisions of IT Act. On 15th March 2019, she purchased a residential house in Chennai. That means she sold one residential house and purchased another residential house. So she is eligible for exemption under section 54. And apart from that, deposited 12 lakh rupees in State Bank of India under capital gain account scheme to construct one more floor in the new house. Compute tax liability if income from other heads is nil. Now see, the new point in this problem is regarding stamp duty, and second new point is regarding the exemption under section 54. Now see carefully. Computation of long-term capital gain of Srimati Jyoti for the assessment year 1920. Consideration received 72 lakh. In the problem, if you see, actual consideration received is 60 lakh. But the government valuation is 72 lakh. And we are taking 72 lakh because the government valuation is more than 105% of actual consideration. Actual consideration 60 lakh. So 105% of 60 lakh, 63 lakh. Now here 105% comes to 63 lakh, government valuation 72 lakh. So 72 lakh you should take. Transfer expenses nil, net consideration 72 lakh. Indexed cost of acquisition, actually she purchased for 12 lakh 50,000. 12 lakh 50,000 is the actual cost of acquisition into 280 divided by 113. At the time of purchasing, the CII was 113 given in the problem. So 30 lakh 97 345 is the indexed cost of acquisition. Subtract it, net capital gain is 41 lakh 2,655. This is the capital gain. Now exemption under section 54, 41 lakh 2,655. How we got it, I'll explain working note. So long-term capital gain will become nil, zero, no long-term capital gain. The asset is held by the SSC for more than 2 years, so it's a long-term capital asset. Stamp duty value is more than 105% of the agreed consideration. Hence, full value of consideration is 72 lakh will be taken. So consideration received should be taken as 72 lakh because government valuation is more than 105%. Now, Exemption under section 54. Transferred asset is residential house and a house is purchased for residential purpose. So exemption under section 54 is given. One residential house is sold, another residential house is purchased. So exemption under section 54 is allowed. In addition, the amount deposited in the bank under capital gain account scheme is also eligible for exemption. The exemption will be given for the cost of the new residential house plus the amount deposited in a public sector bank under capital gain account scheme. Both will be eligible for exemption. The exemption is list of the following two amounts: cost of the new house plus amount deposited. The cost of the new house is 38 lakh and amount deposited in bank is 12 lakh. So total 50 lakh rupees are eligible. Whereas capital gain amount is 41 lakh 2,655. Whichever is lower, compare these two amounts, whichever is lower will be allowed as exemption under section 54. So 41 lakh 02655. This is the amount of exemption under section 54. So deduct it, you will get nil. When the long-term capital gain is nil, the tax liability is also nil. That's it. So totally I have solved 21 problems on computation of capital gain, income from capital gain. So if you have watched all the videos, definitely you got some confidence in attempting the problem on capital gain. So if you have not understood, again rewind the video again from beginning. If you see, definitely in the first or second attempt itself, you can get a lot of confidence. So if you are satisfied with my lecture, give a like to the video. Give your comments, give your messages. I'll read each and every message. That will give you more and more enthusiasm to provide much more better videos on different subjects. Share it in your friend circle groups so that more students can get the benefit from these lectures. And don't forget to subscribe my channel. In the next video, I'll start the next topic, income from other sources. So keep watching. Take care of yourself. See you in the next video.